Well, it's Wednesday morning, 7th of July, and the stock market's down about 0.5% this morning. Now, on Tuesday afternoon, it actually rose about 1.3%. The Reserve Bank came out, didn't lift interest rates, and that was not really a surprise to anyone, but it did make some people think that the Australian economy could do better. The market had sold off pretty heavily. In fact, July is down, June was down, May was down heavily, and April was down. So the stock market overall is still in a downward trend. One of the big issues is the new mining tax. Now, it's been spoken about a lot and what it means for politics and so forth. What is interesting is that it actually hasn't done anything for the share prices of the major resource companies. So if you look at where BHP or Rio or Fortescue was when the old tax was still being debated, the new tax coming in hasn't helped things. And that is because analysts are much more concerned about commodity prices now than they are about the government's tax take. And I don't believe the government's new commodity price forecast. I think there's a bit of a risk that the Chinese economy will slow down. We already know that Europe is moribund and will probably stay that way for some time. And some people think the US economy could be headed for a so-called double-dip recession, a U-shaped recession. That is one recession, a bit of a recovery, another recession to come. So those things, the fundamentals, are more important, and the market at the moment is not very confident. As I said, the other thing about rates is you would have thought keeping them on hold would be good for the banks, but bank share prices have been spectacularly weak over the past few months. I read this morning that Australian banks have to borrow $130 billion over the next year to meet their financing requirements. Well, we have got through the worst of the global financial crisis, but finding $130 billion at a reasonable price is still no easy task for our big banks. And if they have to pay higher funding costs, which they probably will, they will pass those on to customers, that is everybody with a mortgage or a credit card or a car loan, irrespective of what the Reserve Bank does. So I think there's a real risk that actual market interest rates could rise over the next 12 months, even if the Reserve Bank leaves them on hold. And finally, in takeovers, there's quite a few bids on the table at the moment. Sigma got a revised bid this morning. A South African company, a pharmaceuticals company called Aspen, had bid 60 cents a share. They said it was subject to due diligence. They've done their due diligence. They've come back with 55 cents a share. Now, the stock is up to 47, but the problem I think with this one is that I just don't know if the Sigma board is going to accept this bid. It's near the low for Sigma's share price. They've got a new CEO. So I think if you're in the stock, difficult one, don't assume you're definitely going to get 55 cents. There's a fair chance the bid won't be accepted by the board, in which case you could be better selling out now.